It would be great to have someone who could do our work for us, right? Someone to prevent us from making mistakes. Someone to assist with our routine professionally and allow us to devote our time to communicating with our closest people. If only we could get results without wasting our time for nothing. Unfortunately, it's impossible in real life. But wait, light Forex social trading. Spend your time doing what really matters to you.
It's the 8th of March 2019, Piotr here, and that's the pre-London market preview. As you can hear my voice today, I'm sick like hell, I'm sorry. So that's gonna be short and hopefully that's gonna be sweet today. Anyway, we are going to start with risk warning. Please bear in mind that trading FX on margin carries a high level of risk and may not be suitable for all investors. You can sustain a loss of some or all your initial investments, so please do not trade using the money you cannot afford to lose. Alright, so that was the risk warning. Let's have a look what we have on the charts. Dovish Draghi sends euro dollar lower. So from that perspective, it looks like we are trying to break down from this consolidation. So it's all about weekly close, right? If we are gonna be able to stay below, all right, so that may open the way towards 110, 109.50 over the course of next few days. So that's very, very important development here on euro dollar. 12.50, 12.75. That's the possible supply today. That's what I'm gonna to look for. That's what I'm gonna watch around the non-farm payrolls. All right, and the most important thing from the FX market perspective and from the dollar perspective, I would say it's not gonna be the headline, right? Like, I don't know, NFP, let's say 200, and then unemployment rate. What's important from FX perspective, right? What is important from market FX market? It's earnings, right? Wages. So here, I would say that's something we should watch very, very carefully. Anyway, on the dollar side, on the dollar index, where the euro dollar is got the biggest weight. Actually, we didn't break out yet, right? So on one hand, we broke down on euro dollar mostly because of the dovish European Central Bank, but on the dollar side, we didn't break out yet. One of the reasons is weaker dollar yen. Very, very red Tokyo session. I mean, Shanghai stocks index down below 3,000, Nikkei down, and what we've seen during the Tokyo session was much stronger yen. One thing, it might be because of the end of the fiscal year in Japan. All right. On the other hand, the sentiment during the Tokyo session, the sentiment yesterday during the US session was quite negative. What was different, right? Some time ago, dovish Draghi would probably create huge optimism. We would see the green stocks, but not this time, and that's the important change. That's the important development. Looks like weak growth within the EU area. LTRO, new LTRO is not enough to help to create positive sentiment. So today, from the FX market perspective, non-farm payrolls, we have a bit mixing signals right now. We do have a breakdown on euro dollar, but we didn't clearly break out on the dollar index. So watch out for the weekly close. Be very careful. Again, as I mentioned, the most important thing that's gonna be wages, earnings. So always devil is in detail. Again, guys, I'm so sorry. I'm so sick. So today, short, hopefully sweet, and that's it. Be very careful around. See you again next week. Take care.